it means is, for example, you wish, or let's say you want to, get something, you want to develop something, and you don't have the money, right? But you know that you're projecting the future. You know that if you get this money at this particular time, there's something that you needed to do. And so loan for itself is basically creating wealth. You can use loan to create wealth. And we've seen, even over the time where financial terms, people say, oh, loans are the best thing to do, credit, get those things together. It's not compulsory to use your money and all those things. We've seen that one of the things that banks like to do is also to give loans, as regards, also because of, definitely they'll collect collaterals for that, right? So loan generally is just to, people use loans to build wealth, and obviously their interest, and then you pay back. As we can see, there are popular ads that pop up on our screen every time advising us to take loan. So loan in itself is not bad. I think there's a mentality that people feel that, oh, loan is bad, but actually loan is not bad. Loan is basically used to create wealth. Now, moving to my biggest strengths, I think insurance is to help you protect against hazards, or let's say protect against things that will happen in the future. Now, one thing that's very peculiar, for a lot of people is they say, oh, there's risk attached to everything. Let me start from there. There's risk attached to everything, meaning that as you're walking on the road, it's a risk. We all know what's happening in Nigeria currently. You are trying to get something online, it's a risk. So what insurance now does is that insurance is it's a safety net. I'd like to put it like that. It's a safety net whereby you are guarding against this type of risk. So, and what you do, one thing I like to say, or one thing you do, is that insurance is just a little. You're just paying for, when you pay for insurance, you're just paying a little amount of money, right? And that amount of money is to guard you against a particular number of risk, or one particular risk. So when this risk occurs, you don't need to go and fetch out money from your bank account. The insurance company will just pay back what you deserve according to the documents you have signed and the policy you have signed. So insurance in itself, is just a I can say you can use to create wealth, because when you say create wealth, one thing about wealth is that when you have wealth, you obviously need to maintain it. And that's one thing that the rich people know, ahead of people that maybe are not as rich as they are, is that they currently insure. Just to drop a tidbit, one of the biggest insurers in Nigeria is Dangote, right? And you may be wondering, why does Dangote need to insure so much? I mean, if something happens, he has enough money, right? The same thing, one of the biggest people that get loans too is still among the rich people. So what am I trying to say is that these two things coming together is how we can both maintain and both create wealth. Because insurance, if anything happens, let me give us a practical example. I like to give examples, sorry, because I love to tell insurance stories. You bought a Mercedes Benz. Let's say you bought the Mercedes Benz for 3 million naira, and then you pay an insurance premium for a year. Let's say you pay about 600, because insurance premium is the value, 5% of the value of that vehicle. The premium is the value they're going to pay. That's 5% of the value of your car. That's the premium. And then you can now divide it to what you want to pay, right? So, because there's third party and comprehensive. I don't want to bore us with all those all those grammars now. And then let's say you pay like 600,000 in a year. Just it's probably going to be less than that, definitely. You pay 600,000 in a year, and then something happens to that car, maybe after 6 months of driving, and then you need to cough out another 20 million to probably get the car. When you have that insurance, what insurance does is that insurance can give you back that same car. I've seen a situation where I saw a car that got damaged. Just the guy just insured about some months before that time, and then the car was a write-off, a GLE, right? So we know how expensive that is. And then the insurance company gave him they gave him a brand new GLE, right? So it just shows you how that if that guy had probably may not have had that 40 million to pay back or to buy back that car, but because the insurance company, because he had done insurance, a very little amount of insurance, which was not to a million naira, the insurance company paid back that certain amount. So in terms of creating wealth, or in terms of maintaining wealth, insurance is one thing that everybody must know, because it's very important and it's always overlooked, because people feel they're just dropping money and then nothing happens. But we can't say, accidents will not tell you when it's going to happen. So I think for me that's just a brief introduction to the subject matter. Thank you very much, Victor.
Thank you so much, Simeon. And I like the way you explained it, especially the examples you gave. I was about to even interrupt you. You said something about that with it. Did you say is the biggest insurer in Nigeria or insurance?
Yeah, it's one of the biggest. It's one of the biggest. It's one of the biggest insurance. So, for example, those
Insurance,
trucks you see when
insurer.
yeah, insurance. Yes, in insurance, it's one of the
Okay.
biggest, one of our biggest customers. So, those Dangote trucks that you see,
Yeah,
Dangote trucks that you see every time, right? And then you see, this
yeah.
truck has fallen down. This truck is hitting one car, whatever the truck is doing. And then you're wondering that what is happening? This guy is losing money, but actually it's insurance companies that are paying. Because for every Dangote vehicle you see on the road, they have insurance. So it's insurance companies that are paying for those money. So he's one of our biggest customers in insurance. Actually, Dangote is one of the biggest. It's not. It may not be the biggest, but it's one of the biggest
But
in
one of
insurance.
the
Yeah,
top guys.
yeah,
Wow,
yeah.
wow,
One of the
wow.
top guys. Yeah.
I'm just saying that. See why sessions like this are important. Thank you so much. So to move on to the next question, I mean, the first question was just to give us like a bit of an overview of the topic and what it's about and why it's beneficial for building wealth. So we're going to move to the next question, which is so a lot of people still see insurance as an expense. I think people would say, or some people would say that something the big guys or companies should worry about. From your experience, what mindset shift needs to happen for people to start seeing insurance as a real wealth building tool and not just a backup plan?
I was in a session I think a couple of months ago, and the person asked this exact question, and I was just laughing, right? So for me, insurance is there needs to be a mind shift. Many a times we non-Nigerian generally is an issue across. So currently in Nigeria, insurance penetration in Nigeria is not up to a percentage. So what I mean is that insurance in Nigeria is not up to 1%, right? As the whole insurance companies that you're probably seeing, the whole insurance you have heard, our penetration is not still up to 1%. That's massive, right? It's still about, let's say, on the last statistics I checked, it's still about 0.3, right? That's different. So 0.3 minus 100%. Just imagine how many percentage we still have to cover, and that's because there needs to be a mind
Like,
shift. So for
hi,
insurance,
Simeon.
yeah,
Sorry to interrupt
yeah.
you. Do you mean the whole Nigeria?
Yeah. The whole Nigeria, yes, it's less than a percentage.
Yeah, you can go ahead. Just wanted to
It's less. Yes, you're surprised, right? It's less.
right.
It's actually less than. It's less. It's less. I think South Africa has the highest. South Africa too is not up to 11%. So that's a very massive for Africa, but Nigeria is really really behind. So yeah, there needs to be a mind shift. So many people see insurance as a cost. But I can always tell you, and people see, oh, insurance is for people that have money, it's for the rich. But let's just role play here. Just imagine you have, for example, I got an iPhone, and then my iPhone is, let's say I got my iPhone 500,000, right? And then a rich boy like Victor got his iPhone for, let's say, the same 500,000, and then Victor is a rich boy. Victor probably has 2 million in his account. I just have this 500,000. Let's say I saved this for 6 months before I could even get my iPhone. Now those are two scenarios. So somebody is richer than the other person. And now, if who do you think that if this iPhone should damage, who do you think is going to pay most, or who do you think is going to affect the most? It's going to affect the person that saved for 6 months before he got it, than the person that has maybe like 10 million in his account, and then he just needs to just cough out another money to drop on it, right? So that's a shift. That means that generally people feel that insurance is for the rich, but actually insurance is for the two parties. But people that are not as rich as the rich, I don't like to say people are poor, because I don't like to say that really, but people that are not as rich as the rich, just accept me like that, right? They actually need it, because if something happens to what they currently hold dearly, it will take them a long while, or let's say it will take them, it will be a massive cost for them to get that same thing back. So what that simply means is that insurance is for everybody, and insurance is not a cost. The time we start to see insurance as not a cost, then we can see how this thing can be beneficial for us, right? Currently in the US, in Europe, what they do, why they have quite a level of penetration, is because many of their insurances are compulsory, right? And that's why you see a lot of things happen and then they come back. It's because it's actually regulatory. It's compulsory for many of them. And but for in Nigeria, yeah, I've met some people and say, oh, why don't you have insurance? For example, let me just go to practical. I love to give examples. I had an uncle that uh, you know he had this CRV, I think CRV 2022, and then he was trying to park in his house, and then he crushed the wall just here in Anthony, and then the car was damaged. So I met him. We're just going from work. I happened to meet him on the road, and then he told me that the cost for repairing that car was 2 million naira. Then I asked him, I said, Egbon, you didn't have insurance? He was like, no, and I wanted to get it too. There's always a story. I wanted to get it too. And I was like, if you had insurance, all you need to do is to just snap the car, send your documents, and then that's it. The insurance company will pay you back that same money, right? Or better said, carry your car to a mechanic that they use, and they will fix that car within weeks. So this is a mind shift that a lot of people need to have. So if I, for example, let me just tell you something. If you are buying, for example, if you are buying a phone that is 500,000, behind that 500,000, you always have a mind of insurance, because if anything happens to that gadget, you think it will not pay you, but at the end of the day, it's going to surely affect your delivery. You understand? So, but once you have insurance, insurance is just a backup. It's a backup to say that if this thing happens, this is what's going to, this is what I have in mind already. The way you, for example, the way we invest and we say, oh, I want to invest for the next 5 years. Also, you can play the same thing with risk, because all of us have risk, right? Instead of taking your, so I'll end up on this note and say, instead of taking your risk by yourself and saying, oh, if it happens, I leave it to God, you understand, and leaving your risk open, why not transfer this risk to insurance companies that are capable of handling this risk? So there's a need for a mind shift, for a lot of people to know that insurance is not a cost. Insurance is a necessity, something that you need to have. Currently, for me, I have, if my phone screen currently should damage, I currently use like an 11 Pro, and if my screen should damage, my phone screen should damage, I just pay 3.5, and then my phone screen is going to be fixed for me. Do you understand? So I'm not scared, as much as I need to be careful, but I'm not also scared that anything, that these things can happen, because it has happened before. Do you understand? So practically for me, there needs to be a mind shift for people to say that, oh, come on, insurance is not a cost. Insurance is a necessity that we need to have. So I think that's it for me. Thank you so much, Victor.
Thank you, Simon. Thank you, Simeon. I like the fact that you were trying to whine me there by saying Victor that has money. I'm sure it's another Victor, sure. So
we
thank
know each other, don't worry.
so you've already started mentioning like some types of insurance, like which you gave reference of your uncle's car and your personal phone. So I guess we'll just move to this question that has something similar. So we know there are so many insurance products out there. There's life, there's health, um, there's income protection, there's assets insurance. It's sometimes it can be very confusing. So given someone's income or stage of life, how should they know which insurance to prioritize first?
Okay, yeah, thank you very much. I think I'll just start like this. I'll try to, in my own language, break the types of insurance that we have. So, particularly for me, in insurance, we have, insurance is divided into two, really. We have life insurance and we have general insurance. So, I don't know if you have interacted with insurance companies before. You can meet an insurance company and say, oh, come and insure my car. And they're like, we don't do car. And you'll be like, oh, are you guys not all the same? No. So, life insurance is basically, what life insurance basically means is that, just imagine you insuring your life, like your life. That means your life. Like when you say life insurance, my life. So everything that has to do with my life, that is life insurance. Now, when it comes to general insurance, this is for insurance for assets. So for your cars, for your gadgets, for your buildings, for all those kind of things, right? And then life insurance, I've heard people say life insurance, are you praying for me to die? Life insurance is not just about death. In life insurance, you can also save. You can also you can save for your children's education. Let me give us a practical example of life insurance. I like to talk about life insurance because if you have to ask me what insurance are you made to do, I would say you should get it too. But I would prefer life. Why? Because, so for example, let me give us a practical example. I had a cause of seeing a situation where a man, he was late. Before he died, he actually had this health insurance for his son. As not health insurance, he had this life insurance for his son where he was putting some certain money every month to his son, should in case, right? And then he the unfortunate thing happened. He died and all, right? And then his son had already started a scholarship in Canada. Yes, you're correct, yeah, Canada. And then, because of the amount of money he had been paying to insurance, he told his wife. So his wife just remembered, he told me my husband told me that he had been doing an insurance, with an insurance company. And then she found out the documents and went to the insurance company. To cut the long story short, he claimed. So what claim means is that when you insure, when it's time that you need the insurance, you go back to the insurance company and say, okay, this is what has happened. I need to get the insurance cover for this, and then they pay you back that certain amount of money. Do you know that insurance company they paid enough money that finished that guy's education in Canada? Now, just try to think about it. Imagine that this guy's father had not had that notion of actually doing insurance while he was alive, right? Just imagine how the son would have been stranded. Probably have opened a GoFundMe for that. So I'm trying to say that really, really, for young people like myself, insurance, all the insurances are very necessary. Another one that is very important also is health insurance. So I had a privilege of, maybe because I'm in the industry and then I make a lot of content, so I relate with a lot of people. And then I had a course of, I made a video on this, some couple of months ago, and then met this person, wanted to do health insurance, his wife wanted to give birth, and then he went to the hospital, this and that. He spent over 1.11 million, on just childbirth. And then when my friend told me, I was like, "Are you joking? 1 million on childbirth?" I'm like, when there's health insurance, I was like, "You didn't know, right?" Health insurance, I'm sure that I think the cheapest you can get in the market probably around 7 to 10,000, right? And monthly, once you pay that thing monthly, the health insurance is going to cater for everything. Let me just drop this dice there. I know some people may hear on the call may also be doing something similar. People that go to gym, many of them use health insurance for gyms. So some gyms, right, is health insurance. So they're not really paying their money. When I said this, some people came after me. I'm like, bro, it's the truth. If I'm to go to a gym now, right, maybe iFitness or whatever gym, I don't need to pay. My HMO already covers for it, because HMO and health insurance are actually the same. When they say HMO, it's still the same thing as health insurance, right? So those are things that people can get. And there's also gadget insurance. There's also income insurance. So that means that, for example, income insurance. Let me explain that briefly before I just drop back to Victor. That means it's a very simple thing. What does that mean, right? It means that you have a certain income already coming into your account and everything, but something, god forbid, maybe there's a permanent damage that you can't work again. So let's say the person is a truck driver, he can't work again, peradventure is doing something, he can't work again, maybe there was an accident or death, right? What that insurance company will do, because you have already been paying a certain amount of money monthly for that insurance already, what it will now do is simple, right? It will pay you back that lump sum. Do you understand? You can pay back a lump sum. If you don't want it to be lump sum, you can say, okay, let's insurance company will pay me monthly, something like a pension, right? So for these are just different insurances I've just tried to touch here right now, because I tried to touch everything. And the last one also I skipped, that was gadget insurance, right? So gadget insurance, you can insure your phone, you can insure your laptop, you can even insure your house, you can insure the things in your house. Maybe there's fire outbreak. In case of fire outbreak, flood, if you're staying in Lekki areas, flood is something that happens almost every time. So when there's rain, so these are things that you can insure. If I'm to advise, I would say get a life insurance. Make sure you get an health insurance, because why are you spending your money in the hospital when you can just spend a little amount of money? And just to leave on this note, insurance always pays back more than you paid the insurance company. That is very, very, I want you to just know that. So if you pay a certain amount of money, insurance will always pay you more than that particular amount of money. So that's it, Victor. Thank you very much. I believe I was able to touch on a few things.
Yeah. You're able to touch on a lot of things, and I just always enjoy when you give examples. It makes like the explanation much relatable and easier. So thank you so much. I was responding to someone that was trying to join in, but I guess so beyond just so we've talked about what insurance is, what loans are, how you can take them and their benefits, why you should take them, which one you should take at different stages of your life, and which one should you take at different stages of however you are making. I think we'd also like to touch about because there's some people building a career, and then there's some people like running a small business. So let's touch on that. So for someone building a career or running a small business, what role does income protection or business insurance play in safeguarding their wealth and preventing setbacks that could take years to recover from? What role does income protection or insurance play?
Okay, thank you very much. Right. I think this is very, very, also very important. What role insurance will play? So as I said, insurance is very, 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 very important. Now, as a business owner, right, or as a business builder or an entrepreneur, or maybe you're a career person, why you need insurance is simple. The more you progress, the more the risk is high. The more, that's why you see, okay, let me just use this trajectory. Let me just use an example. Sorry. If you stay on the mainland, or let's say you stay in some certain parts of the mainland, right? Your security is not as strong as some other areas on mainland, right? So there are some estates you go to, you need to probably drop a card, you need to call the person before you enter the estate. And there are some estates that you don't need to call anybody, just enter and start navigating where the person is staying. Do you understand? Those are the two different. There are two different scenarios. That's the same thing about insurance. So it means that the more you grow, the more the risk is high. So the more you go, the more you are taking on more risk. And once you are taking on more risk, insurance will be something that should be at the back of your mind, really. Once you're taking more risk, insurance should be something that should be at the back of your mind, right? So, for example, what are the insurance you can take as an entrepreneur? As Victor had said, there's what we call income protection, like I explained earlier. So that means that an income protection, I will not touch it in the line that is a product under insurance. I'll touch it as income protection generally. So let me give us one example. So there's something we call fidelity guarantee. Now, fidelity guarantee is the type of insurance that business owners take against theft. So let me give us another example. Like I said, so I happened to hear this story of somebody that was at Surulere. She was selling clothes she had a big store of clothes in Surulere, and then she noticed that her books were not matching up. Right, her books were not matching up, and she was suspecting her. She was just noticing it was not matching up, but she began to suspect her, salespeople and all those things. And then one day, she she did the spoke to her, and then she did the fidelity guarantee insurance. So fidelity guarantee is a way to protect your income also as a business. And then she did that insurance, and at the end of the day, she saw that it was a salesperson that was stealing her money, right? What did she do? When she found out that, okay, for example, let's say she was going to make a profit of 5 million and then she was making maybe 4.5 million. But because of this insurance that she had done, when she reported this case to the insurance company, after she had taken legal action against the salesperson by sending her away and police took her away, the insurance company, because she had already insured against that particular loss that she was hoping might have happened, the insurance company paid back that amount of money back to her. Do you understand? So insurance is way more than just life or car, or there are many other places that in fact business people need to have. If you're an entrepreneur and you don't have insurance, probably you don't have how you don't have insurance for your store. Maybe you have a store, you don't have insurance for it. These are actually, because I mean, fire can happen, they can be damaged, they can be hospital, many, like, it's a lot, right? All the risk, everything can. I just think of anything that can happen, right? And think of how you can mitigate against this thing. And the only way you can mitigate against this is actually by getting insurance. So why not just pay this certain amount of money that when this happens, you can get this overweight. There are many other things I can share. For example, there's another one, public liability insurance. So I don't know how many of us have gone to ShopRite before, and then you see park at owner's risk. I don't remember seeing that thing before. When you go to ShopRite and then you see park at owner's, or you go to any
Yeah.
mall and then and then do you know what the meaning of that, right? So what it means is, so for example, you go there and then when you say park at owner's risk, you now park your car. What they're trying to tell you is that if anything should happen to your car, you sabi, even if though it's in their compound. So what that means, do you know that some of them they attach insurance to it? So let me explain that to you. So it means that, for example, if you come there and say, oh, my car was damaged, they stole maybe they stole, like, maybe it's a Toyota car, maybe they stole your side mirror or brain box, right? And then you report to the company and say, I'm going to sue you. You guys must pay back. The company will just be smiling. And once they have insurance, they have public liability. Once they all be smiling and they say, okay, take us to court now. You take them to court. Do you know that it's insurance that will pay for that court bill, not the company? So many times when those things happen and then they just take them to court, it's insurance that is paying. Do you understand? So there are many insurances that business owners can take, and all this, it boils down to building wealth. How does it boil down? Because just imagine that company had to, out of 100 million that they made, they now have to remove maybe like 10, and those cases can be long, maybe like 15 to 10 million on a legal case, something that insurance could have taken. So imagine if they had to remove that amount of money, it will have reduced their money, which will have amounted to their wealth. But if they had also had insurance will have catered for that one, and they will have had more ways to make more money, because they're not focusing on that thing. Insurance is catering for that, why they focus on that thing. So there are many other things, even for the person himself. Just imagine a business owner. We've seen businesses where the business owner died, and then that was the end of the business just crashed. But if you have insurance can still hold on to that business. So when that business owner dies, insurance will pay the next of kin, which can now use that same money to push the business forward. So there are many things that as young people or as business entrepreneurs, as people that are aspiring to grow, insurance should be something that should be like your side. It should be something that should be attached to you, something that you should think about every day. As I'm going into this business, how can I insure in case something happens? So that's basically it for that. Thank you very much, Victor.
Thank you so much, Simeon. So in a way, in summary, insurance, it goes hand in hand in running be it a small business or a medium-sized business, because I mean now you're safeguarding your risk by also running your operation without fear of what could happen. Because at the end of the day, it's business, just as life. Anything can also happen in business. So in a way, you're also protecting or safeguarding your wealth by using insurance. Thank you so much. We know loans generally get a bad reputation, and some people will be like, once they hear the word loan, I don't want to owe, no, I don't want to owe anybody or something of that such. But there are times when borrowing can actually accelerate wealth growth. From your perspective, what are examples of responsible loan decisions that actually support a long-term financial plan? Before you go for that, I think there are a lot of people. I saw some hands being raised before. So, guys, in the next 5 to 7 minutes, we'll wrap this up and start taking questions or contributions. So, just bear with us before that. So, yeah, you can start dropping your questions on the chat box, by the way, if you or your contributions, and we'll take them after this. I mean, when we're done. So, Simeon, over to you.
Okay, thank you very much. As I said, insurance is my strength, but that doesn't mean that you don't also need loans. So how can loans accelerate wealth? There are many ways, right? Just like I said for insurance, business expansion. You want to expand. Let's say for example, your business is just in Yaba. You want to take it to Ikeja. You might not Ikeja, maybe I don't know. Ikeja may be more expensive than Yaba. I actually don't know, right? So if you want to get it, you need some amount of money to come in, right? So you need loans. So those are gaps that you need loans. So for example, you want to expand. When you want to expand in your mind, just know something. Loans can help. Do you understand? Loans can help to expand. Another one is you want to get a property. So for example, we know that one of the greatest ways to save wealth or to even create wealth is buying properties. So like going into real estate and kind of things like that. But at the moment, there's some kind of lands that you may not be able to get. And obviously, when it comes to loan, there's obviously risk. Obviously your loan officer can definitely advise you on how to take what to take at a certain period of time. So those ones are settled on that. But one of the ways you can also get you want to get a property, you want to expand, you want to get an asset that's appreciating. You don't have the money. Let's say you just have about maybe 50% of that money. You actually need loans also, to be able to add to that, to get that particular property, and then from there you can begin to expand. Now another thing again, which is obviously very funny for some people, is maybe education or certification. So for example, I know some people that are here, you want to go study in Canada, you want to go study abroad and all those kind, but you don't have the money. One of the things that people do is that some people use loan to go and study and then they pay back, right? So those are ways that people use loans, because one of the things that you may be wondering, why would I want to get a loan to go and study abroad? Because one thing that is evident, we've seen it in this economy or in the world today, is that knowledge is very important. You need to know, and if you want to know, you may need to want to progress in your career, or maybe do certifications, and those certifications don't come cheap. You need to spend money. You may not have that money at this particular time, but it's guaranteed that once you study this and this and this is going to open up to you. You can then take loan for that. And once you do that, because one of the greatest ways of also wealth is your intellectual ability. So wealth, more than wealth is money, or wealth can be money. Your intellectual capacity. Because once, for example, for me, right, I know that once I still have this insurance knowledge in my head, wealth is always going to come. Because as much as I still have this thing in my head, wealth is going to come. And so if there's a course I need to go and take again to further boost or further push myself in the industry, right? And I don't have the money, I will definitely go for loans to get this particular thing, so that I can increase my earning potential. Now the other one is for maybe just for expansion also. You want to get, you want to go into, maybe you want to get just like let's say you're a child deck, you want to expand, you want to get vehicles, you want to get bikes, you want to get properties in your building, many things you want to do, right? But you don't have the money. Even if you have the money, right, you can even take a loan and then use your money. There are many ways around these things that probably you cannot say yes. So I think for me, those are just the places I can see. Those are the four areas I believe that loan, personally for me, that I know can definitely accelerate what you already have, which is wealth. Yeah. Thank you very much.
Thank you, Simeon. I think just to add to what Simeon said now, I think one thing people need to understand is when it comes to loan, there's something called good loan and also bad loan. I mean, good loans are loans that you use to either like generate an income or to accelerate your income, and then bad loans are just something you take just to splurge, just things like that. So if the loan is for a good cause or for a good um example, like the example Simeon have given, like a business loan where you're trying to probably buy some machines to double your production, or a mortgage where you're trying to own a property instead of like paying rent, or sell it out, or put it out for rent, or a loan to buy equipment. As far as a loan to generate a business to accelerate your income, it's considered like good loans, other than getting a loan to splurge, or probably you have an event and you haven't met the ticket or this the dress, and then you're trying to get a loan to for that. I mean, that's a depreciating kind of way to get loan. Just to add to what Simeon said, so we are, I think we'll wrap this up in like 5 minutes. So we should go to something more practical. We've touched a lot um on the different categories or explanation of loans and insurance. I think we can also try and go practical now, so to give it a more contextual feeling or explanation. So I think we should just tackle middle class, because I mean that's, we can use that benchmark to also gauge other benchmark in Nigeria. So for someone earning between let's say 150K and 500K, like that's like 150,000 and 500,000, and wants to start using insurance intentionally, what simple and realistic steps can they take in the next 30 days, or whenever they want to start taking that steps? What are the simple and realistic steps, and when should they take it in their career?
Okay, thank you very much. Particularly for me, right? When you said in 30 days, it's very hard to stick to particular number of days. I can remember making some things I want to do this year, and then I don't think I've done 50% of what I want to do, but that's just on a lighter mode. So for me, right, I would say using a benchmark of middle class, let's say 500,000, right? Or let's say between 150 to 500,000, right? I think the first thing is very important, which is health, right? If I'm to advise, so I would say get an health insurance policy, get an HMO. If you're working for a corporate firm, for example, right? If you're working for a firm, you can ask them, or even if you want to maybe get another employment somewhere, you can ask them, do you have an HMO? Right? If they say no, that might be a red flag. Right? If they say yes, that might be a green flag. So if they don't have, you can also get personal, HMOs, and then you can get it for as low as, I think the lowest currently is about 7 to 10,000, if I'm correct, in the whole market, and then you get that, and you get your health insurance, because health is wealth, right? Health is wealth. If anything happens to you, you would have to, possibly, spend some certain amount of money again on getting yourself back to state. So that's also very, very important for them. And also, another thing again I would say is, if you are, for example, you are a tech guy, or you maybe not even a tech guy, you use laptops, you use phones, you have a car, these are the next things you need to insure now, because if those things will happen, one of my friends recently was telling me, I just saw something on his car, and I was like, it happened on the road, we're going to work, and then I just asked him, how far, what's up with this your car now? And it was when he told me the amount, I was like, this is somebody's salary. And then so it can affect you. That's what I'm trying to say. Like, anything happens to your personal gadget or anything can affect you. So those are also things that you need to consider and say, oh, I need to do this insurance, I need to get a phone insurance, or I need to get a vehicle insurance, or I need to get gadget insurance, just something around that, because these are things that if something happens to it, you know you're going to like put your hand on your head and sweat before you get that same money back, right? And another thing again you can also do is that you can get a life plan. So for example, a life plan means that nothing needs to happen to you. So in insurance, there's something we call it savings in insurance. So that means that when you save, You can, instead of saving in a bank, for example, you can also save with an insurance company, let's say for a maximum of 2 years. But what that does is that if anything happens to you during that savings period, like my company offers that particular product, if anything happens to you during that savings, let's say you're saving for 2 years, and then God forbid something happens to you during that space of 2 years that you're saving for, the insurance company is liable to pay you back a certain amount of money, right? So what it means is that aside you just saving, which other conventional people will do for you, right? You can also have insurance attached to it, for that. So, and that's also one thing you will need to do by your side. Then, obviously, this is not insurance. Always have an emergency savings, right? Always have some money in your account, right, in case of one or two you need to do. And I think that's it. And for the insurance, right, if you are considerate and saying that, oh, I may forget to be insuring every day. I may forget to do this every month. There's also direct auto debit, just like the way you probably have your Spotify accounts, maybe even have the banks or investment portfolios that does debit a certain amount of money, every month from you. The same thing you can also have with insurance. To pay your insurance premium monthly, you can just have a debit, right? So I've mentioned premium, but I've not explained what premium is. So premium is basically the money you pay for an insurance service. That's all premium is. So I think we just particular do just 4 points I mentioned, or let's say 5 points. Those are things that within that certain amount of money, those are things that you need to get ready because let me rephrase that. Those are the things. With these four things I said an HMO. Insure your gadgets. You can start a life plan with savings. Also have an emergency savings. These are things that if you have everything right, I can almost tell you that your money will grow. You will keep wealth. You will make wealth, and then you'll be able to go sustain what you have already. So I think those are the things for me. Thank you very much, Victor.
Yeah, I think I agree with you for the most part of it. We are close. We can just end this with this final question, so we can take at least one or two question or contribution. So to wrap this up, so I know we've talked about different mindsets and habits that would drastically. I know we've talked about different mindsets or habits that could drastically like improve how Nigerians use insurance. But just to wrap this up, if there's just one mindset or habits that could drastically improve how Nigerians use insurance and loans to build wealth, what do you think that would be?
Can you come again with that question? I didn't really get it.
Okay, so I said to wrap this up, if there's just one mindset or habit that could drastically improve how Nigerians use insurance and loans to build wealth, what do you think that would be?
Okay, I've gotten that. So I think it would be protect. I'll just say protect, right, while investing. I won't say before. I'll just say protect while investing. It's simple, right? It means that as you are obviously trying to put money in things, trying to get a loan, which is important, also trying to invest, buy whatever you're going to buy that you know that this thing has an appreciating value in the future, right? You also need to do what you need to protect. So because you can invest and then you don't protect. So you can get loan. So they work hand in hand. If you get a loan, it means that you have gotten something for the future. You have got something to do a particular tax you want to do. But if you don't protect that particular thing, everything can just go, you know, and that's the end, right? So the mindset I would just like us to have is that for anything you are doing, always try to protect it. It's better to protect than to lose it all. And also in terms of loan too, right? Always, let me rephrase it like this: when you find something difficult to do, right? Try to see how best you can get a loan. When you get that loan, always remember to protect it. So I'll say protect while you invest. So that's, I think, if there's one mindset, if there's one, there are many, but if there's one, that would be it. Yeah, thank you very much.
All right, thank you, Simon. Thank you so much, Simeon, for breaking this down so clearly and practically. I mean, I enjoyed the examples you were giving because they are relatable examples that you can just relate to, or you probably have heard it from somewhere, and then using it to explain this topic was, I think, really vital. Um, and thank you everyone who joined us today. We hope these conversations help you rethink how you approach loans, insurance, and your long-term financial plans. Um, so we can take questions and contributions now. You can drop them on the chat box, or you could signify to speak. Okay, I can see some hands raised up. But before we go into that, I'd like to um let you all know that this session was brought to you by Risevest, and I know there'll be like a couple of people or some people that this is their first time joining this conversation, and you might not know who Risevest is. So Risevest is a digital wealth manager that connects Nigerians and Africans to global investment opportunities. And there are different opportunities different investment asset classes that you could invest into: fixed income securities, US real estate. So basically, buildings or houses in the US, and then we rent them out, and then we pay you every month. And then there's US stocks and Naira wallet. They each all have their own percentage of of returns you get. But I think the main things that we do differently are two things. We act as fund manager, so that means we don't let you figure out which stocks to buy. We just help you do that on your behalf, and because we have experts that do all these things. And then secondly, we have three fully managed investment plans that, depending on whichever risk appetite that if you're high risk, medium risk, or low risk, you would definitely be offered like decent returns. I guess we can now go back to answering, for questions. So let's start with you first, Adejari. So I think we should just keep this very brief, so at least two, three people can also have opportunity to go. But why these people ask their questions, if you think this session was very insightful for you, you can drop that on the chat box before you head out, to really, encourage people that could not join to, tune in for the next time. So you can just tell us how this session went for you. If you found it insightful, you could just be, I found this session insightful, thank you. And that's all. If you don't want to go into much context, thank you so much. So Adejari, I'm going to be giving you the opportunity to speak. I just granted you access to speak. So lastly, guys, just let's keep this question or suggestion to just about the topic, not products related, so we don't mix each other. So I just granted you access to speak now, Dejari. Please, we are waiting for you. So just 30 seconds to ask your question, and then probably our speaker will use 1 minute to answer it. So 2 minutes for each. Hi, Adijara, are you there? I just granted you access to speak. Okay, I'm just going to take someone else. So peace. I just granted you access to speak. You can go for it.
Good evening, sir. Can you hear me? Good evening.
Good evening, peace. How are you doing this evening?
Fine, thank you. The section was very insightful. This is my first time of joining this section. I think is very insightful and educative. All right, my question goes, please, the speaker, the illustration you gave about the fire incident or fire insurance incident. Okay, my question is, what if at the end of maybe what if at the end of the time maybe that person does not didn't get any fire outbreak incident, or there was no accident or nothing happened to the person. Now the money that that person saved for that purpose, will the insurance company refund back that money to the person? That's just my question, sir. Thank you very much.
Okay, Victor, can I go ahead to answer that? Or
Feel free, please.
okay. Thank you very much. I didn't see the name, so I wanted to mention the name. Thank you very much. So yeah, so one thing about insurance, I think I didn't have time to expatiate. So insurance is a pool. It's a pool of pool of risk, or better said, it's a pool. What I mean by that is, so for example, why do you think that if you get your motor insurance for 15,000, you have a cover of up to 3 million? Does it look? It's not magic. It's not like your insurance company is going to put that money somewhere and then double it to become 3 million. It's not a scam, right? So it means that 1,000 people are putting 15 million into a particular pool, and then from that same pool of, let's just imagine 1,000 people putting 15,000 naira in a pool. From that same pool, they pay, people that have this accident, or better said, they have this they have these places where they need to claim, maybe something happened and all those kind of things, right? So when it comes to fire insurance, or but like the example you gave, The insurance companies are going to pay back. And then I explained why they're not going to pay back. It's because um, for general insurance is 1 year. You have a 1 year grace period, right? Life insurance is different. Life insurance you can save for 5 years on the go. You can insure for 5 years. You can insure for 10 years. But for insurance currently in Nigeria, you can only insure for 1 year for general insurance. So that means that if nothing happens to you during that 1 year, that money has gone. And now, I've had people have asked me this question before, and they're like, why would I not pay if nothing should happen? But the issue too, the other side of it is that if something happens, you can't say if something's going to happen or something's not going to happen. You can't say, right? So that's the difference in it. Do you understand? But if anything, if nothing happens to you during that period, your money cannot be gotten back. Now, insurance companies have developed that. Some of them might not have incentives, that they give people maybe here and there, but actually, that money that you paid cannot be given to you back. Do you understand? Because if something happens to you during that period too, they will need to get the money back. And just imagine how many people insurance is going to pay if nothing happens to them. Because at the end of the day, something cannot happen. So for fire insurance that I mentioned, it's only for 1 year. So let's say you start January, it ends in December, and then when it goes to the next year, you have to renew that insurance again. So yeah, that's it. The money is always gotten back. Yeah, thank you. I believe I've answered
All right.
the question. Yeah.
Yes, you've answered my questions. Sorry. Secondly, you talked about loan. I don't know. The insurance company, do they give out loan to individuals or corporations or anything?
No. Insurance companies don't. They don't deal with loans. Insurance companies don't deal with loans. They don't deal with loans. So if you want to get loan, um, you can definitely reach your probably finance manager. There are also companies that we've seen ads of different
I know
companies that
that.
give
I know
loans.
that. I was just
Yeah,
asking.
yeah,
All right.
yeah. Insurance, yeah,
All
insurance
right.
don't.
Thank you very
Insurance don't
much.
give loans. Yeah, thank you. Yeah.
All right. Thank you.
All right, thank you, Simeon. Thank you, please, for asking your question. So Clement, please make it brief, just 30 seconds. Thank you so much. And I just granted you access to speak now, so you can go for it. Hi, Clement, are you there? And I don't know, I lost the first person since that time. Guess they
Good
haven't
evening.
rejoined.
Can you hear me?
You're quite
Hello?
low, but yeah, I can hear you. Can you be can you be a
Um,
bit louder?
are you hearing me better now?
Yes. Good evening, Clement. How are you doing?
Okay. I'm fine, thank you. So, my question is about loans. Who do we approach for loans and what companies should we avoid?
So
Okay. Yeah, I think
okay,
Victor, you can go ahead. I think you should take that. Thank you.
okay. So when it comes to loans, I think first of all is to first assess the reason why you're taking the loan. I mean, after that is all done, there are different loan company online, or I mean, that you could search about. The very detrimental thing about loan is finding the one that suits your financial planning for that particular time. There are some that the interest is very low, and there's some that the interest is very high, depending on the tenure of time you are taking the loan for. So I think the first thing is to assess the when you are going to pay back, and then the interest you are paying back. So that is where, like, I mean, personal research or financial research, if you want to pay for to financial advisors, comes in. So the most important thing is checking their testimonials. I mean, who uses them, or their the reviews you get online, or the reviews they from people that have used them. And the second is to assess the interest. So is it a big interest? Because if it's a big interest, it means when you're borrowing this loan, you're also paying back a lot of interest, because for every loan you take, I believe there is an interest that you have to pay back for the loan. And then some have like different different incentives. So for some, when you're paying back the loan, you have this particular times. Some is a very short time, some is a longer time. So different companies have their different structures regarding loan. So it's just to find the best one that is to your financial something. So I wouldn't want to recommend any because I'm not. Do you get?
Okay. Yeah.
Simeon, do you want to add anything to that? But did you get that, Clement?
No, no,
Just
that's
to
fine.
avoid.
Like that's
Yeah,
that's it. Yeah, that's it. Perfect.
yeah.
Yeah.
All right, all right. Thank you so
Thank
much
you.
for taking the time to tune in. And thanks for asking your question. So we have 1 more minute. Does anyone have one more question or contribution? I mean, you could just to cheer the speaker up. You enjoyed a particular part of the conversation, or you learned something new today. It could be you learned something new today that you haven't learned. I mean, today I found out that um, obviously Dangote is one of the biggest insurance in Nigeria. So if the, I'm just going to read the
Biggest insurance consumer.
biggest insurance consumer.
Yeah, so that means that he's one of the people that gets a lot of insurance in Nigeria. Yeah, he doesn't have an insurance company, but like
Fascinating,
biggest consumer.
fascinating.
Yeah, yeah, yeah.
So um, at the end, I mean, if you don't want to speak, you can always drop your comments or your suggestions in the chat box. So we have come to the end of this interesting session, educative to valuable. Um, and thank you all for tuning in, especially those that tuned in early and um wait waited till the end of the session. Really, really appreciate if you join in the middle. Really appreciate. I mean, for taking the time to be here, it's highly appreciated. And this topic was actually something that is very vital because a lot of people have different misconceptions, be it loan, be it insurance. I mean, why should I? Are you saying you want to kill me? Why should I insure my life? And I mean, from the explanation from our guests, we've seen reasons why these things are important. It's just the way you prioritize your investment. You should also prioritize, I mean, having tools that also get you to building wealth faster and not also faster, but in a way that aligns with your financial goal or financial planning. So, I mean, one disastrous event doesn't set you back and things like that. So, thank you all for tuning in early. Thank you for asking your questions. Thank you for listening. And if there are no any more questions or contributions, I think Simon, you can give your final words, and then I'll just wrap this up. So how was this session, or just anything
Okay,
final?
yeah, 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 yeah. Thank you very much. I mean, it was very insightful session. I myself, there's some things I said, I'm like, oh, okay, so I truly knew these stories, right? And it was very insightful.
Me
I'm happy
yourself.
that a lot of people joined. I'm happy that a lot of people joined, and then I also, you know, I believe, one thing I'll just let me just jump straight to one thing I'll leave us with is the fact that insurance is not a cost. Insurance is a necessity. So insurance is something that, as long as you are getting something, you should always think of insurance. You have a business, think of insurance. You want to get a car, think of insurance. You're getting a phone, think of insurance. You're getting a new apartment, think of insurance. Everything you are progressing in life, think of insurance too, right? So I think that's just what I'm going to leave us with. Insurance is something that is a necessity, right? Abroad, anything you buy, everything you buy, insurance is attached to everything you buy, basically. Do you understand? So the same thing about Nigeria, and there are a lot of regulations, in Nigeria also that are pushing, for that also. So I'll just leave us with saying that insurance is a necessity, it's not a cost. And then we can then push on. Thank you very much, Victor. Thank you so much, Risevest, for having me on this live. Thank you so much.
Thank you, Simeon. I really appreciate. I really appreciate you. Only for me to want to wrap this up, and then I'm seeing like three hands raised up. Guys, are we? I was literally asking right now, but so yeah, just to wrap this up, I mean, I gave us if you miss like the beginning of the session, I was telling us how we organize this every last Saturday of every month. Like it's on a standby, like it always happens. And the main aim, like I said in the beginning of this conversation, is to help our members to invest, manage, and grow their money better. As much as you're earning more money or as you're earning income, whatever you are doing, be it your career or your business, you also have to know how to manage that money very well. Because if you're not managing it very well, some things will be eating into it that you wouldn't know where it's coming from or how you should manage it better. And then you have to also know how to grow. I mean, there's always opportunities for more growth. This is why conversations like this happen. We had a conversation about tax last month. We had another one about Upwork before. We had another one about bookkeeping. So this is something we do every month. If you'd like us to, you can just join the community, have conversations, and just enlighten yourself. There's like Warren Buffett once said, there's always the biggest investment you can ever give yourself is by learning more, like by educating yourself on more new things. That's the biggest investment you can ever give yourself. You investing in yourself is an investment. So that's to wrap this up, and also to tell you thank you for tuning in. This topic was very good. Thank you, Simeon, for taking the time. Thank you to everyone that also attended. And this to wrap this up again, this session was brought to you by Risevest, and I also gave a brief explanation of what Risevest does. So I'm going to be ending this conversation now. I would really appreciate if we drop our comments or review or question or contribution. Just it could just be thank you for this session. It could just be this session was insightful. It could just be this is what I learned. Just anything, just to it just helps people that could not attend to look forward for the next one. Thank you so much, guys. Have a lovely evening and enjoy the rest of your weekend. Bye, everyone.